फंड का रिटर्न और इंडिविजुअल का रिटर्न कभी मैच ही नहीं होता है. So what's your take on this?
So I completely agree with him. Maybe less than 5% of our investor base, 10% of our investor base has managed to make the same amount of returns as we have in our funds, which is very sad.
And when we invest into foreign funds, dollarization also kicked in, right? तो उसका कुछ return benefit मिलता है.
Historically, it's been about 3 to 5%
Okay.
every year.
People say that stock selection is as a psychology important. तो आपके हिसाब से क्या ज़्यादा ज़रूरी है? IQ is more important or EQ is more important?
High IQ tend to do badly in the stock market. So
There's one guest जिन्होंने बहुत एक अच्छी लाइन बोली थी, कंपाउंडिंग कितना ही सिखा लो कितना ही बोल लो, समझ में बाल सफेद होने के बाद ही आती है. All right. Welcome to the show, Pratik. Thank you for coming here and recording this with us. So before we begin, the first thing that I would like to ask is about your journey. So before joining Motilal Oswal and heading the ETF and passive fund division, what's been your journey like? How did you come here eventually?
yeah, so my journey. So actually, been spending most of my adult life in somewhere in finance and investing. So I was first exposed to the stock market when I was about 12, 13 years old. And, I picked up my first book on the stock market at maybe 13, 14. And since then, I've been quite hooked into the stock market, into investing, into finance. So my formal sort of education also was pretty much, related to finance and economic. And so I always sort of, and it wasn't like forced. It was always, I felt like this is something which I like doing, I enjoy doing. I always enjoyed it. Reading investment books at 15, 16, when you have so many other avenues, but I still enjoyed it. So there was some natural attraction towards it. Maybe it's because of my family or whatever. I don't know, but there was it. And, it sort of helped. And I'm always using books to fill my curiosity for anything. So investing was my first curiosity. And now obviously I have many things to read about, but earlier on investing was. So in terms of, in my career also, I spent my first half of my 20s in more traditional finance, investment banking, private equity, hedge funds. And then the second half, I was actually in the Bay Area in technology. So I used to help run a fintech startup in Silicon Valley, which sort of, was a bit of a robo advisor. So it helped investors sort of, invest into mutual funds and, ETFs. So did that for about 2 or 3 years. And then, while I was doing that, I was really exposed to how investors outside of India invest their money, which is pretty, fascinating because, how does a portfolio of an average American or an average guy from the UK or, it's like a developed country, for example, how do their portfolios look like? And what I saw was the portfolios were extremely diverse and, very much, allocated towards many different types of asset classes and strategies. There was active funds, there were passive funds, there were quant funds, there were factor-based funds, there were international funds. When I came back to India in 2019, from the US, I saw that in India back then, the definition of index funds was Sensex is Nifty. That's right. And also the definition of mutual fund investing was long only mutual funds, active mutual funds. So the idea was, can we really build, can we add innovation to the mutual fund industry? And that's how sort of how I started sort of my career in India at least. So, and that's how I sort of, today I'm looking at ETFs, index funds, international funds, factor funds. We also have actually a third vertical that we started about 4 years back on quantitative investing or quant investing. That is something which I was also involved from the very start. And, if you look at quant investing, 5 or 6 out of the 10 largest funds in the world are quant funds. So the idea was, can we build some sort of track record, knowledge, expertise in quant investing? It's something which I have some track record also. So, that's also something which I've been doing and it's got some good traction recently. So that's how I've sort of got to where I am today. But the idea is to really, really make investing simple. We believe at Motilal Oswal that the one way to create wealth is to really invest. Well, the asset class that gives you the most amount of returns is equity. And a mutual fund really simplify equity investing and ETF simplify mutual fund investing.
Correct.
So we do feel that if we really want most of India to invest and create wealth through mutual funds, We think passive can make life very simple, very long term, and I think that's what really excites me the most for that.
So your answer has like given me a few questions to ask. First is, what were those books like when you were 11, 12, 15, 16? At that time, you were reading finance books.
Yeah.
What were those books? How were you able to comprehend it?
Yeah. So I some of them actually were quite technical. The thing about technical books is that when you were small, you felt like the more complex the book is, the more
Cooler you are.
no, yeah, the cooler you are, and also I feel like you feel like there's so much more to learn. There is like the complex books will give you the most amount of value add if you're able to decipher what it means. So but what I've learned over the years is that the simpler the book, the better it is. I think the book that is written for everyone is somewhat the most effective and the best in terms of how to live your life. So I think I started off with very, very kind of complex books. Read about options and read about there is a very interesting book called The Theory of Investment Value by John Berger, which is very complicated. Books written in the 60s, 70s, 50s. That era were very complex. Were very complex because that was how English was back then. Now, obviously, English language is a lot simpler. So I think started with sort of combination of complex and simple books. Honestly, there was no list that I could describe. We do feel that guys like Warren Buffett, Phil Fisher, Charlie Munger, Peter Lynch, these are all very standard books that have become quite popular. And I would say that everyone who's invested in investing, I think could look at these books as a starting point. So, books like those are classics, and I do feel that every investor should pick up these books. They're not very difficult to understand, but I think it will really add a lot of value in your lifetime.
You mentioned about Peter Thiel. So there's one very interesting quote that he, used to mention during his fund management time. That फंड का रिटर्न और इंडिविजुअल का रिटर्न कभी मैच ही नहीं होता है. मतलब 20-25 साल फंड का रिटर्न देखते हो उनके खुद के फंड का, इट्स अराउंड 20% प्लस केगर. But then very few investors in his entire, who invested in his mutual fund did not generate that kind of return. So what's your take on this? Mutual fund का return versus individual who are investing in that same mutual fund, उनका return.
So I completely agree with him. हम मतलब म्यूचुअल फंड चलाते हैं एंड हमने देखा है कि हमारे इन्वेस्टर्स भी एग्जैक्टली द सेम है. हमारे म्यूचुअल फंड्स they if you look at Motilal Oswal, 80 तो passive funds are very decent, but active funds will be around for 10-15 years. And maybe less than 5% of our investor base, 10% of our investor base has managed to make the same amount of returns as we have in our fund, which is very sad. हमने एक्चुअली एक बहुत अच्छा स्टडी किया था 2022 में, जहाँ पे हमने म्यूचुअल फंड के जो फ्लोज है, इंडस्ट्री के फ्लोज है, उसको हम ट्रैक करके वी वांटेड टू डिसाइफर हाउ मेनी व्हाट इज द एवरेज रिटर्न दैट द इन्वेस्टर मेक इन म्यूचुअल फंड्स, एवरेज इन्वेस्टर. तो अगर एवरेज इन्वेस्टर का मतलब है इफ यू ऐड एवरीवन,
वही म्यूचुअल फंड की बात करें.
सिर्फ म्यूचुअल फंड इन्वेस्टिंग में, तो हमने देखा है कि करीबन 5 से 7 सालों में वी टेकन 5-7 ईयर स्टडी, द इंडेक्स ने एट दैट पॉइंट इन टाइम ने डिलीवर किया था करीबन 12 से 13% CAGR. एन एवरेज इन्वेस्टर यूज्ड टू मेक अबाउट 7%. दैट्स इट. तो हम एक्टिव फंड्स, पैसिव फंड्स के बारे में बात करते हैं, बट एवरेज इन्वेस्टर्स मेकिंग अ 5%, एंड दिस इज looking at the entire mutual fund industry. So an average investor is underperforming the index by 5%. And honestly, if you think about it, fixed income में you will make slightly better return while looking at equity. So I think क्या हम क्या कर रहे हैं इंडस्ट्री में कि हम बहुत सारा एफर्ट दे रहे हैं फंड सिलेक्शन पे, बट एक्चुअली द ब्यूटी अबाउट इन्वेस्टिंग इज नॉट फंड सिलेक्शन, इट्स अबाउट बिहेवियर. अगर आपका बिहेवियर बराबर से आप if you have a good philosophy on behavior, you'll be actually able to make a lot more money. So this behavior gap of 5% जो बात किया था, it's come down, which is great. तो हमने ये सिमिलर स्टडी किया था लास्ट ईयर, और ये करीबन अभी 2 या 3% हो गया है, बिकॉज SIPs have gone up tremendously. So बहुत सारे भी जो इन्वेस्टर्स है वो SIP के थ्रू इन्वेस्ट करते हैं, और वहाँ पे बिहेवियर गैप goes down to close to zero. बिकॉज SIP में क्या है, यू डोंट हैव टू टाइम द मार्केट. मैक्सिमम बिहेवियर गैप होता है कभी when you invest in good time and sell in bad time.
Correct.
When you're buying high performing fund, just that fast track record बहुत रहता है. When you cancel SIPs, when you are investing in very speculative indexes या speculative funds, thematic funds हो या sectoral थी, तो ये सब 4-5 चीज़ों को आप मिलाओगे तो आप देखोगे व्हाई द बिहेवियर कैप कम। सो आई थिंक फॉर आवर परस्यूट ऑफ मेकिंग 20% रिटर्न्स, we are making 7% returns.
Correct.
So, and I think very few investors end up making index plus returns.
सो प्रतीक, इफ वी लुक एट इट, एसआईपी क्लोजर के नंबर्स सेम आप जो पैटर्न बोल रहे हो वापस हमको दिखने लग गए. इफ वी लुक एट द नंबर्स ऑफ दिसंबर, जनवरी, द नंबर हैज गॉन बियॉन्ड 100% एज वेल. जहाँ पे नई एसआईपी जो चालू हो रही है वर्सेस जो बंद हो रही है, वो बंद होने का प्रपोर्शन ज़्यादा है, इट इज़ हायर. So what's your take on that? Like, what should people do, and what kind of literacy is required for this particular audience set to, not actually get into that entire dilemma?
No, so I think, हमारे जो इंडस्ट्री है, लकली नाउ वी हैव लॉट ऑफ डेटा. पहले क्या था, हमारे पास डेटा इतना था नहीं. अभी क्या हमारे पास बहुत सारा डेटा है. सो द आइडिया इज एज एन इंडस्ट्री, इफ यू आर एबल टू टॉक टू कस्टमर्स, इफ यू आर एबल टू, अगर उनसे बात करके बोल सकते हो कि आप एस आई पी क्यों बंद कर रहे हो. आई थिंक इफ यू आर क्लोजिंग एस आई पीज इन फंड्स दैट मे नॉट, सपोज आपके पास 30-35 एस आई पी चल रहे हैं, then it makes sense. You should not have more than maybe 6, 8, 10 mutual funds maximum. अगर बहुत सारे तो you should close some of them. But I think the funds where you are looking at from a long term perspective, SIP का only effectiveness आता है जब आप 10, 15, 20 साल के लिए इन्वेस्ट कर रहे हो.
Correct.
अगर आप सिर्फ अच्छे टाइम में इन्वेस्ट करो, बुरे टाइम में इन्वेस्ट करो, तो you will actually not make money. You will actually destroy wealth.
Hmm.
In fact, the benefits of SIP investing in a bad market are better than the benefits of SIP investing in a good market. तो ये अब जो हमारा मार्केट है अभी, जैन से मार्च 2025, ये बहुत ही, मतलब ऑब्वियसली वी सीन अ बिट ऑफ अ बेयर मार्केट. अभी इंडिया बेयर मार्केट में है, बिकॉज, और मेरे हिसाब से जब बेनिफिट्स ऑफ लमसम एंड SIP इन्वेस्टिंग बोथ आर हायर इन अ बैड मार्केट देन अ गुड मार्केट. So that education needs to go out, and I think asset managers like Motilal Oswal and other asset managers, should go out there. So we are at Motilal Oswal doing a SIP campaign, right? Where we started, we know that valuations on the higher side. So हमने, and actually as an AMC, our SIPs have gone up 3 to 4 times in the last year. हमने, because the only reason is because we feel the markets are slightly expensive, and we feel that SIP is a great way of getting new customers and getting them to invest for us, right? तो हमारे हिसाब से क्या है, this education about SIP investing in bad times, the fact that it's better than SIP investing in good times,
Correct.
needs to go out from all the AMCs, all the guys in the market, all of that.
Correct. And say, for example, when we do, investing for 10 years, 15 years, 20 years, compounding kicks in very well. But our minds are, wired to think things in a linear terms. हम लोग compounding वाले कितना बोले, कितना समझाए, कितना सोचे, but minds are never able to function that way. So as a fund manager, or, when you run an AMC, how do you, tweak your brain to think, about compounding in that way?
Yeah, so compounding is, so there are, the only way to create wealth actually. हमने देखा है कि, if you ask any investor who's been investing for the last 30 years, and we have a lot of clients, luckily as an organization we've been around for that long. So we have clients who invested with us in the early 1990s. जो हम अभी तक बात कर रहे हैं उनके साथ, एंड अगर आप उनको पूछते हो कि हाउ वाज योर इन्वेस्टिंग जर्नी, एंड दीज आर गुड इन्वेस्टर्स, कंसिस्टेंट इन्वेस्टर्स. दे आर नॉट इन्वेस्टर्स हु आर, आते जाते, नॉट ट्रेडिंग बट इन्वेस्टर्स. वो उन्होंने उनका कोई स्पेयर पैसा है वो डाल दिया है, और दे जस्ट वेटेड ऑन. एंड इफ यू लुक एट इट, द वन रिएक्शन आई गेट फ्रॉम मोस्ट ऑफ them, and the one reaction I get from most of them is that, "Oh, I have no idea how that happened. How has my wealth gone to such a level? It doesn't make sense to me." Correct. I know numbers are there, but it really is something which we fail to understand. And every 5 years, it amazes us. Every 5 years.
Because it almost doubles.
It doubles every 5 years, so, whatever you invested 15, 20 years back is multiplying 10 times, 15 times, 20 times every year.
Correct.
So from where you started versus where you are today, all these investors are, the only feeling I get is of shock,
Correct.
and it makes them invest more today, So, and I think the beauty about this is the fact that they are not looking at investing at 10 and selling at 20. They are looking at investing at 10 and investing in from a point of view that they want to invest for 50, 20, 25 years. So, most of investors today have only been around for 4 years. And 4 years, may unfortunately, we haven't seen compounding, but we've seen good price increase. Right. So we've obviously seen the opposite of compounding, where we've seen greed. We've seen people come in at 10, now their portfolios are 40, and they're like, "Arey, yeah, this is how life is." No, this is not how life is. We so far, if you look at India, India had about um, 4 crore demat account holders till about 2020. So since the 1970s, we've only acquired 4 crore investors. Unique. आज के तारीख में this is about close to 19 crores. Correct. So we've had four and a half times worth of investors come in the last 4 years, and all of them have a tremendous experience. Especially, I mean, except maybe for people who come in the last 4 years, but majority of them have seen a lot of wealth creation. I think that's been great. So, but what's really important to understand is that for them to see real value creation, they have to wait another 10, 15 years time. So we believe that compounding is the only way to create wealth. I think and compounding is very good from a point of view that it's, as you said, it's not linear. So your brain will never be able to understand how it works. Something which goes up 10x in 10 years will not go up 20x. Will go up 100x in 20 years.
Right.
So I think that equation is something which you can only understand if you use a SIP calculator, or if you use a compounding calculator.
Or experience it yourself.
Yeah, so I would really advise everyone who's listening to, all they have to do today is go and play around for about 10, 15 minutes on the SIP calculator, and don't look at it from 5, 10, 15 years. Look at it from 30 years, 40 years, 50 years. Investors who are starting today in the early 20s, if they're able to stick to the investing for 30, 40, 50 years till their retirement, whenever they retire, they have the ability to make 80,000 times, 90,000 times, 1 lakh times the amount of income as they're putting in today. And that only happens through compounding. So again, as I said, that's the most important. And I think the problem with compounding is that it's very slow and it takes a long time. Right? First 10 to 50 years of investing, compounding is very slow. We'll barely see it. But then after the 15th year of investing, suppose you start investing at say age 20, till 35, which is my entire professional career, you see compounding, but you see it a very small way. But post 35, you see your net worth, your investments really like go up tremendously. Like every year, you'll be seeing your net worth from when you started, quadruple, go 5x, 6x, 10x. And if you have a market like the last 4 years, you might see your investments made 10 years back go up 100x. So that is the beauty of investing, and we do believe that compounding is what you should look at beyond
that. And when you come from the fund management part and so passive investing is very recent to India if you actually look at it. It's there in existence for about 5, 8 years if I'm not wrong. So how do you see the proportion? Like people still choose more of active fund, or passive funds is gaining popularity in that sense?
Yeah, so I think what has happened is passive funds are now getting very large, broad-based adoption. पहले क्या था कि a lot of investors who are coming for the first time, who are looking for simple funds, they are looking at passive funds. Say मुझे निफ्टी में डालना है और भूल जाना है. Now what has happened is the category has broadened, which honestly may or may not be a good thing. It's become very complex now. What we started with simplicity has become complex. We at Motilal Oswal run about 42 plus passive funds. Okay. And that's huge, just passive. 42 mutual funds, and this number will go to about say 70 or 80 by the end of this year. So I think number one, passive funds are broadened. So if you have an idea, if you want to bet on an idea, there'll be a passive fund for it. But from a portfolio perspective, which is what you asked, we believe that today an investor needs to have a combination of active and passive.
Okay.
So most investors we're seeing say that, what it makes sense to me for me to have a 20, 30, 40% allocation to passive. The rest can be active or some other. So I think it's become more of a not active versus passive, but active and passive.
Completely.
Which is where the US is gone. If you look at an average US portfolio, very few portfolios will be 100% passive. Most of them will be about 50 to 70% passive. The rest will be active. Okay. Or maybe 30-40% passive, the rest active. So it's always a combination. And that's where we believe India also is heading over the next decades.
And say, for example, when you are building a passive fund, stock selection goes out of the question because we are eager to replicate an index. So what exactly things you look at when you know are looking at a passive fund? Ki, haan, I'm building this passive fund. These are some criteria that I'll make sure should be there so that the investors benefit the most.
So the criteria should be your uh, your requirements. So today the requirements are so what's really interesting is that so far, and we have like millions of customers. We work with tens of thousands of different type of distributors, advisors, wealth managers, and what's very interesting in the world, not only India, is that there is no one portfolio, or there is no overlap that I know these 10 guys who are running roughly the similar portfolio. Everybody has a different portfolio. Everybody has a different mutual fund. Everybody has a different strategy. Everybody has a different perspective on investing. So it's almost like, your social media feed is different from mine, correct, different from someone else's in this room. That's what investing a portfolio is like. Everyone is very different, diverse in their needs. Correct. And I think the beauty about passive funds is that there's just so many options for you to satisfy your needs, whatever they may be. So I think, but the most popular need tends to be your broad-based passive fund, your Nifty 50, Nifty 500, mid cap, small cap. So if you don't want to time the market, there is no performance issue. Costs are extremely low. Right. You can invest and forget for 20, 30, 40 years. So the simplicity of passive funds, especially broad-based passive funds, is something which we believe can have a excellent, because if you're having a portfolio of say 6 to 8 mutual funds, maybe you want 3 or 4 mutual funds out of that to be slightly more agile, but 3 or 4 can be mutual funds where you can just buy and forget for life. And you'll have passive funds can come in. So there's low cost. And what is happening also that the returns of passive funds are now on par, probably more than what you get in most actively managed funds. So in a large cap index, there's very few, active strategies that are outperforming the index. Mid cap also maybe there 3 or 4 funds that are outperforming. So what the investor is getting is a fund that's simple, low cost, long term, and which will make pretty much, on the returns on the higher side for however long you invest in. So I think that's the beauty and simplicity of passive.
And when you say, for example, compare Indian markets with uh, the US markets or the European markets, a lot of similarities we see कि US जो 20 साल पहले था इंडिया में आज वो होने लग गया. So likewise, how do you see the mutual fund industry in the US or the UK and then seeing it in India? यहाँ पे passive का adoption कैसा है? People, how many people are shifting towards ETF investing? What is that kind of similarity do you draw?
So I think the trends are there. I think you probably see similar trends over the next 10, 15 years time. I think unlike the US, India is still inefficient as a market. So there is scope for good stock picking for active funds and passive funds. US में active funds don't do very well. यहाँ पे there is scope for both to perform really well. So I think that's one thing which is important. The second difference is that US में क्या है, ETFs have a tax advantage over index fund.
Okay. How is that? What is that?
So what happens is in an index fund is, in India, if you're buying and selling stocks in an index fund, you're not taxed.
Right.
In the mutual fund.
Right.
In the US, you are taxed. So when you're buying and selling an ETF on the exchange, you're not buying and selling the stocks. You're buying and selling unit.
Right.
So because of buying and selling units, there is an inherent tax advantage when you choose ETFs over index fund. So because of this, index funds, to be honest, in the US are not very popular. Most of the action is on ETFs.
Right.
In India, this difference is not there. In fact, in India, has an opposite problem. Right. Where ETFs are very inefficient. There's very low liquidity on the exchange. There's a lot of impact cost. People don't want to buy mutual funds through demat account. So index funds tend to be preferred in India. And we believe over the next 10 years time, index funds will probably be the dominant way of retail participation. AUMs will come into ETFs because ETFs are preferred by institutions, and so 80% of the AUM of passive funds in India comes from a few investors,
Right.
these institutions. That will stick, but if you look at retail participation, that's probably happening more on the index fund side. So that's the only difference. Otherwise, honestly, it's the same. We don't see much differences between India and US.
And I think Motilal Oswal is an AMC was also one of the few AMCs जिन्होंने international passive funds launch किए थे. Like you can track the US market using one of the fund. So how does that work? Did it turn out well? वहाँ पे हमको participation दिखा, adoption दिखा लोगों का.
That turned out very well. I think so. We were the first AMC to launch an international fund back in 2011.
Right.
हमने NASDAQ ETF करके launch किया था.
Correct.
और back in the day we were excited. तो मैं नहीं था, but the team had gone to NASDAQ US to ring the bell out there.
Right.
Because it was a very big event. Unfortunately, we didn't see much traction for that particular fund at that point because, 2011 में ETFs were very rare. People never understood ETFs. So I think that product was there, but whatever, it was on the shelf. And there were very few international funds. So when obviously, when we tried to look at this category again, we looked at international funds not from a angle where this is good for your portfolio, this will give you incredible returns. We came up with the philosophy that this will give you extremely good diversification with your portfolio. उसका मतलब क्या हुआ? उसका मतलब क्या हुआ कि अगर आपको आज equity से diversification, अगर आपका portfolio और equity mutual funds में, if you're putting all your money in equity mutual funds, the only way to really diversify is to buy fixed income, is to buy gold. The problem with fixed income and gold is that you are giving up returns for lower risk. If you're investing in a NASDAQ or an S&P 500, you are getting the same returns, but your risk comes down dramatically. Why is that? Because Indian markets and US markets tend to move in different directions.
Okay.
When Indian markets do well, US markets do bad. आपने देखा होगा last 3-4 साल में.
Currently 2-3 दिन में भी ऐसा हो रहा है. US markets गिर रहे हैं पर Indian markets are stable.
Even from a longer term, अगर आप 10 साल का horizon देखते हो, 90,000 Indian markets were bad, US was good. 2010, US markets were bad, Indian markets were good. Last decade, US markets were good, Indian markets were bad. So if you look at it from a month-on-month, 10-year perspective, these markets move in different directions. The correlation is extremely low, about 2-3 for someone who wants to know. So that's why these are excellent for diversification. Right. And that's how we pitched international funds to all our investors during COVID. And that's how we've sort of, and I think we did some good launches also. So we believe that investing international is something which every investor does outside of India. If you look at an average US investor, they put about 15-20% of their net worth outside of US. If you look at a European investor, they would put 30-40% of that investor outside of Europe, maybe in the US. Same. So it's a very normal thing to do. It's just that we in India were not exposed to this diversity.
Not have the vehicles also.
We have vehicles also. Now we have lots of vehicles, but now again we don't because of RBI regulations. But we believe that it's the very good thing to do with your portfolio. We have been pushing it very strongly with RBI, with SEBI, with all the regulators. So hopefully, we get we get to restart the fund.
And when we invest into foreign funds, dollarization also kicked in, right? तो उसका कुछ रिटर्न बेनिफिट मिलता है.
इसको आपको historically it's been about 3-5% every year. So if you buy NASDAQ 100, NASDAQ does 20%, and the rupee depreciates 3%. So the return is 23%.
Okay.
So हमने देखा है कि last 10 सालों में the NASDAQ is delivered about 20-23%, but the rupee is depreciated by about 4%. The NASDAQ 100 has given 26% CAGR
in India.
26. Now it's probably more. I'm not sure. This is as of last year. So it's done phenomenally well. And I think obviously you can't expect similar return going forward. But the point being is that you're getting returns from two sources. One is from the underlying stock, right? And the second one is from the dollar, which we believe will probably, the Indian rupee will probably depreciate. It doesn't happen like a straight line. It happens.
There are 2-3 years of stability and
the fourth year it goes down like crazy. So I think it does happen in a very, you can't time it. But the idea is if you're invested from a 5 to 7 year perspective, you'll see rupee depreciation.
And when you do investing, there's a very important thing people say that stock selections are the psychology important. और एक पूरा डिबेट आता है कि IQ और CQ का एक बहुत अच्छा डिबेट होता है कि दोनों में से ज़्यादा क्या ज़रूरी है. तो आपके हिसाब से क्या ज़्यादा ज़रूरी है? IQ is more important और EQ is more important? If when you do,
हमने देखा है कि people with high IQ tend to do badly in the stock market. So it's not about EQ versus IQ. I think high IQ actually does badly because क्या होता है, a lot of people with high IQ, tend to believe that they are, obviously they tend to be uh, wanting to be in control. They think they can predict the markets. What we've learned over the last 20 years is that uh, the markets humble everyone. I think whatever you say, in every 5-10 years, it humble most people. Humble me multiple times to a point where I believe that no one in the world can predict the market. The only way to really make money is to have low IQ strategies, which is basically invest and forget. If you look at the best investors in the world, or at least in India, what are the investors look like? The best investors are doctors and lawyers.
Right.
Why is that?
They don't know finance.
They don't have time also.
Right. They don't have time. They don't know.
Yeah,
Not such a
so the
one.
best investors are the ones that just stay invested and don't do anything. They don't have the time to look at it. They barely have 2 minutes to talk to their advisor or their distributor. They talk. They'll take, even I know a lot of my partners who have doctors and lawyers, and they're like, the problem is we struggle to find even 2 minutes with them, to talk to them because they're so busy.
Correct.
So I think high IQ actually works against you in this industry, unless obviously you're a fund manager and all of that. But if your full-time role is not stock market, then a low IQ strategy works really well. We believe that apart from low IQ, high EQ is very important. Correct. What really differentiates the best and the best of the best is actually not IQ, is EQ. Correct. So they're able to weather these storms that keep happening every 3 to 5 years time. They're able to stay put. In fact, some of them are even are so high EQ that they tend to actually monetize on people's low EQ. How do you do that? Like, for example, high EQ people right now would probably be thinking that, what, this is a 2025 is a phenomenal year.
To buy.
It is one of the best years I've had in the last 5 years. COVID was a great year. The problem is COVID is that the fall was so short and the recovery was so
Could not
fast.
arrange the capital.
Unfortunately, I couldn't like really deploy money. If I had, I would have made a killing.
Right.
Now, high EQ people will be like, what, boss? So this is a great year.
Right.
Maybe the next 6 to 8 months time, if I'm able to deploy lots and lots of money, even on a 3 to 5 year basis, I'll make lots of money. Whereas the slightly low EQ people would be like, what, markets are falling, let me get out, let me cancel it, let me sell my investment, let me try to time the market, which honestly no one can. So I think if you look at 2009 crisis, that was a very interesting time because unlike today's time, that time most people had the view that we are going to enter the Great Depression. If you remember in the US, so I was in the US, I was offered this job. I was graduating in 2009 from the US undergrad.
Did you feel lucky to be
graduate
retained that year?
when I was graduating, but I decided to graduate one year early, and I was given this offer by a company, I won't say, and then they rescinded my offer.
Correct.
Which is fine. I wasn't planning to really stay, but anyway, the point being, I was quite pissed off.
Right.
And so basically, because back then every company was preparing to really go in this really bad state, and everybody was selling and all of that, and there was two investors in the world who really invested big time. Just two investors who really put in lots of money. Yeah, one is Warren Buffett, who put in lots of money in 2009, and the other one was a guy called Howard Mark,
Right.
who makes more money on distress
Right.
investing. So these are very high IQ guys, and I think they really thought that obviously whatever happens, we are buying things that are 30 to 40% cheaper than what they are worth. Now, if they get lower than that, whatever, but I'm getting a good price.
Right.
If I'm buying at 70 and the price of this is 100, I'm getting a good price.
Yeah.
If the price goes to 40, it's okay. I just have to wait for it to go to the price where
Right.
I think there is good value.
And if a 100 rupee thing becomes 80 and you buy at that point in time, you get a 25% return when it becomes 100.
Absolutely. हाँ, वो भी है.
Okay. So
So returns are asymmetric.
Exactly.
Absolutely. So this is also something people don't understand. When the markets fall by 40% or 50%, so suppose 100 goes to 50. For 50 to go back to 100,
100%.
100% returns to you.
Right.
So I think by buying stuff at discount, you're actually making more money on the upside.
Right.
which I'll be honest, this is a slightly complicated concept. But yes, as you said, it's very true. Your willingness to create wealth is much higher when you're buying things cheap. Right.
And I think we're good. I think then we'll cover one part of, the entire bringing up thing with Ramdes sir and your father, how exactly was that वो पूरा phase जो markets का आपने देखा होगा उनके साथ. That is one.
मैंने तो बहुत पहले से मार्केट देखा है.
Exactly.
Oh, let's just go. Yeah, it was. Yeah, it was. I'll be honest. Yeah, we can talk about it. So I can say that's the benefit of I think having them around.
My first internship was apparently with Motilal Oswal, Surat branch. I am technically from Surat and then shifted to Mumbai. PMS sales division.
What about PMS sales? ये कभी था 2000 early 2000s.
Late 2017.
2017.
I'm 29 only, so
2017 was a good year for PMS. Great year for PMS. 2019 was a bad year for PMS.
हाँ 18 के बाद खराब हुआ था चीजें 2 साल के
Yeah, it was very
17 में तो जिससे भी हम जाके मिलते थे
right check.
top.
So after it was a similar year to 2018 for us much as well. But luckily this year also we're doing well.
We used to pitch QGLP at that time.
Yeah, so we've had a share of learning actually from investing also. The beauty about the amount of time you spend in the market is you just learn. I don't know, it's the only industry where you're continuously learning. Yeah. Like if you look at say top management, even Ramdev ji, even at like age, I don't know, 60, 70, you just learn so much new stuff. So it's like it never gets boring, It's almost, I mean, I wouldn't say fun. It's obviously quite stressful, but it's also you get to just learn so much, and market's always surprising you, and you're always learning more stuff about the investor that you didn't know. So it's a crazy industry where the most time you spend, you can get a huge value add. That's why I keep telling investors that earlier you sort of start getting into it, and so now, we have this foundation, and what we're trying to do is trying to get schools and colleges to adopt investing knowledge earlier.
Right.
We believe that there is addition, subtraction, multiplication, division. The fifth is compounding.
Right.
And compounding will play probably a much bigger role in your life than maybe addition will. Maybe not addition, but
Because I think it works in every scenario that you
it works in biology,
biology. It works in your work also, like the work that you do. Initially, when we started, like we had a smaller base of about 10,000 users, but when you started,
user acquisition is compounding.
exactly,
Companies are built on compounding machines, not simple interest. So I think it's a very important concept in work, in life, investing, and even if you want to understand, Charles Darwin and the theory of evolution, a lot of it can be traced back to the small compounding and how small changes on a cellular, on a genetic level create such different outcome for our species over like thousands of years. So it's very interesting. And I feel like the sooner you introduce this in college and school, the better it is. So anyway, we're trying to do that. But the point being is that the earlier you learn about this stuff, the better your life will be. Unfortunately, people still know compounding. They can define what compounding is, but very few actually understand it, which is the biggest problem. And including our office, Motilal Oswal Tower, our head office, we'll have about say 1,500 to 1,000 people. I really doubt maybe 20-25% really understand. They know, everybody knows, everybody's exposed.
Suna hai.
And no, Suna matlab they understand, they'll give you numbers also, they'll run in Excel. But the understanding is which requires, deep introspection and, some sort of, repeated going back to it. That maybe 20-25% of the people understand. Right? Like if you're able to understand this, like
amazing. There's one guest जिन्होंने बहुत एक अच्छी लाइन बोली थी, ये कंपाउंडिंग कितना ही सिखा लो कितना ही बोल लो, समझ में बाल सफेद होने के बाद ही आती है. So basically वो टाइम स्पेंड करते हैं मार्केट में, फिर वो समझ में आता है कि हाँ ये ऐसे किक इन हुई है. Coming back to our this one question where we were speaking about कि थोड़ा सा जब मार्केट्स करेक्ट होते हैं उसमें इन्वेस्ट कर सकते हो. There's one very interesting number that I was going through. Warren Buffett is right now sitting at a cash pile of around $325 billion. Last time he increased was in 2022 जब वापस थोड़ा सा करेक्शन मिला था and then he deployed some and उसके बाद वापस उसका कैश फ्लो बढ़ते ही जा रहा है. So, and we have seen whenever he does that, there's always an opportunity comes around and then he invests and then he makes better money by doing simple investing. So, do you think कि वो भी एक indicator हम पढ़ सकते हैं when we want to seek opportunities in the market?
Warren Buffett's cash pile.
Yeah.
I think, probably not. I know I wouldn't recommend investors to start tracking the cash pile for Berkshire Hathaway because it's a very complex business,
Right.
where we need to keep some float for insurance.
Right.
You have to invest in opportunities where sometimes the opportunities don't come. And I think so. I mean, according to me, I think you know, and he's got it wrong many times. The problem is, if you look at 2020 COVID, he invested in airline.
Right.
She said that I made a mistake.
Right.
And he sold airlines,
Right.
and the airlines again came back. So that's one. Second is, before the COVID crisis, 2020, 19, no one knows, but he invested a lot of money in 19. So he himself is very clear that I'm not a market timer, and Berkshire Hathaway balance sheet has nothing to do with investing.
Correct.
I'm not really trying to create an investing fund. I'm trying to create a business. And sometimes when there are no opportunities to invest, businesses will have cash. Yeah, obviously 325 is a crazy number. So I can, and it is unproductive capital. So maybe there's some mindset there, but as an investor, I think it may not be prudent for you to look at that. Because क्या होगा कि the more you look at these things, the more you will think that I can look at Warren Buffett and I can deploy money in accordance to what he thinks is right and wrong. But he's not thinking of that way. I mean, he's not. If he finds a good opportunity today, he'll deploy $100 billion. No doubt about that.
And I think some money is deployed for mergers and acquisitions also, which is nothing to do with
The amount, they haven't done a big acquisition in a long time now. But I think मेरे हिसाब से you can do it from an intellectual perspective, but don't base your investment decisions based on what someone else is doing. Right? That is the worst thing you could do, especially when it comes to timing the market. If you think that, suppose there's a mutual fund that is holding 30% cash, and it's a good mutual fund, go a well reputed mutual fund. आप देख रहे हो क्या रे यार ये these guys are also bearish, even I should be bearish. Yeah. No, I mean there are different reasons. I mean we run a mutual fund. There are 10 different reasons to why you would hold cash.
Correct.
It's not because we think markets are going to go down.
Right.
Yes, a dominant reason is because we feel that we are not able to find good strategies, but it might be other things as well. So मेरे हिसाब से don't get distracted by a lot of these things. And basically, best way to, as I said, is to really stay invested and keep on putting money at small intervals. Have a savings mindset. That's the best way to create wealth. But yeah, it is interesting to see what will happen to this 325 billion.
And in general, like if you would recommend what should be a portfolio for a 25-year-old or a 35-year-old or a 45-year-old should look like you can divide the answer into three parts.
So I'll give one answer. Honestly, it really depends on their needs. A 35-year-old who wants to buy a house at 40 has very different needs than, say, a 85-year-old who is looking to save for his grandchildren.
Then I can go all equity, but making the walls I cannot.
Making all equities. So I think you really have to look at, I think there's a framework that they say that आपके age के हिसाब से you should have an asset allocation. I think that's a very bad framework.
Right.
I think it should be according to your needs and risk profile.
Right.
Very simple. Needs and risk profile. अगर आपको पैसा नहीं चाहिए next 15-20 सालों में, then you should put most of your money in equities. But even there, if you think that you're not able to take the risk that comes in equities, then you should be a bit conservative. There are people who are investing for 30 years, but they're only 30-40% equities. And that's fine because they can't handle more than that. So I think combination of आपके क्या needs है next 5, 10, 15, 20 सालों में, and what is your risk profile. मेरे हिसाब से first is relatively easier. Second is थोड़ा बहुत complex. हमने देखा है कि बहुत सारे जो investors है, they change their risk profiles, right, which is very bad. अगर market बहुत ऊपर जा रहा है, वो बहुत aggressive हो जाता है, और जब market नीचे जाता है, they become conservative. This is a recipe for disaster. You will not create wealth, you will destroy wealth.
Right.
तो अगर आपका आपने एक रिस्क प्रोफाइल बना दिया है, तो उसके हिसाब से आप इन्वेस्ट करो. अगर आपने सोच लिया कि I will only put half my money in equities, only 40% money in equities, you stay there.
Yeah.
And if you want to make the change, which is fine, you can, Do it slowly, maybe over a year, 2 years, 3 years, but stay there. So I think these two things are very important.
I think a very good answer is given by you ki it's not the age, it's your goal that is
Good.
that will your investments, not your age. Correct. And generally, what are the optimal number of funds like you would suggest for a person to have?
There is no optimal number of funds. I think there should be a maximum level. I think investors should have more than 8 to 10 funds.
Okay. Otherwise, there's overlapping happening.
The more you have, the more you have to worry about.
Right.
There's overlapping. If you have, say, 25 funds, which a lot of people have, if you combine all of them, guess what? Your portfolio will represent the Nifty 500.
Right. So rather take the Nifty
500, rather buy one mutual fund which is Nifty 500 and chill.
Right.
So I think if you're looking at strategies, mutual funds, look at mutual funds that are in different asset classes and different strategies.
Correct.
Agar you're buying say 3 to 4 equity mutual funds. Equity is the most complicated. वहाँ पे आप 3 to 4 strategies दे रहे हो. You can look at, so one can be an index strategy, one can be say a high growth strategy, one can be a value based strategy, one can be a quality based strategies. So you have to be diversified across strategies, or you can be diversified across caps, one small cap one mid cap one large cap one. But make sure that the equity strategies are fairly different. Don't have भी क्या होता है कि ये this sort of a market growth investment does very well.
Right.
Last 4-5 years. तो आपके सब growth वाले mutual funds आ गए.
आते हैं.
They'll do badly now.
Value वाले शायद चल जाएंगे.
Value also now, if values done very well last 4 years, if
Right.
now load up on value may not do well. You don't know, and you can't predict it.
Correct.
But the idea is to have strategies that are, so the beauty about investing in, if you look at the US, वहाँ पे there were two very intelligent things that people ask, extremely intelligent, and no one asks them. One is that if I am pitching a product, which I used to in the US, to say institutions, family offices, HNIs, retail investors also. वहाँ पे when I said that my product gives 15% return, which is pretty good, US में. वहाँ पे they asked me two questions. One is, what is the risk? What are you buying?
First question is about the risk.
First question is, what is the risk that you're taking? And second is, what is the correlation to S&P 500?
Okay.
So you because क्या होता है, to get 15%, you might be taking some crazy risk.
Right.
You might be investing in some really speculative stocks or options or something like that. And second is that you want to understand, okay, fine. If the risk is not much, what is the correlation? If you're investing in a product that is highly correlated to the index, then I shouldn't buy it. For example, crypto. I would not recommend crypto to anyone. It's not a good asset class. But from a portfolio diversification lens, it's such an uncorrelated asset class.
Right.
That from a portfolio management perspective, it is like really, really like attractive.
Correct.
If you just have a 3 or 4% allocation to crypto, it's so uncorrelated. It's so different from anything else there that really adds really of value to your portfolio if you're obviously aggressive investor. But so you have to look at correlation. If you look at risk, and that is what people don't really ask you. You will, हाँ return अच्छा है, ठीक है, डाल दो.
Statistically, crypto अच्छा work करता होगा, but fundamentally
it doesn't make sense. But absolutely. So statistically, it's actually very interesting as well, as because correlation is just it's got a wild correlation. It's not correlated to anything on the planet.
And coming back to your growing up days, like you had people in finance around you all the time. Since your father is Motilal Oswal sir, Ramdev sir ke saath, I'm very sure you had a very close relation with. So what were your few learnings? What were the things that you used to look around while growing up?
Yeah, so I mean, obviously, I was very lucky. So very lucky, very grateful. I mean, no amount of it's basically very lucky, very grateful, and more importantly than finance, I think they're all very good people there, right? Like I mean, there's no one I know that, like, if I had to rank top 100 people in the world, they would be in the top 5,
Right.
so that itself is pretty awesome, that you're spending most of your time at work and home with people who are the best out there.
Correct.
So I think that I would say, and I think the most people, the sort of values that you learn from them, But and honestly, as a career, you really want to be known for your values. Not what you say or what you do and all of that. So I think I was very lucky to be exposed to good values. Good happy home, all of that. I had everything like, luckily, so I had parents who were not very, who left me alone, but also were more consultative. They are good role models, and they let me be and they let me fail, which I think is very important. It's, letting your kids fail is important because it really creates resilience and
Right.
all of that. That really helped. So I think in terms of finance, मेरे हिसाब से I was really exposed to the stock market at a very early age, maybe around 2020, sorry, 1991, so when I was maybe 5, 6 years old.
Yeah.
So, and obviously the good thing is that we never really spoke about work at all at home.
Okay.
So we never really spoke about the market. So way I was the only way I could be connected to the stock market was to actually spend time in office. And I used to go to office all the time since age 5, 6, 7. So I used to go there like maybe once a week or once every 2 weeks. And maybe Saturday we used to go there. My office had very good internet, back then.
Right.
So, I was really into music. I'm really into music. And, it was good because I could download my music, at very fast speed. Back in the day, that was a big thing. So I think I spent a lot of time in office and I was exposed to a lot of people and all of that. So I think seeing cycles is something which I think is very important. And what's really interesting is that the markets in the 1990s were very bad. So, if you look at the evolution of the Indian capital markets, most of the players that really came in to the market came post 96, 97.
Correct.
There's maybe one financial services um, company in India that came before that, and that's Motilal Oswal.
Right.
And most of them who started with them actually end up leaving the industry because how bad things were post the Harsh Mehta scam.
Right.
The only reason why they somehow stuck around is because of passion. So I think what from 92 to 99, almost most days were quite bad. And you always most days business was bad, and we posted a loss in 2001. So I think most days were quite bad. So you really had to say there has to be something that motivates you to be in the industry, which is not great. And I think that passion was what. So I realized the importance of passion, and somehow that passion to stay in and just show up to work and build a business and work hard and innovate. You're the first ones to have an equity research team. We were one of the first brokers in the world, in India, to say things like, no, don't sell your investment. अच्छा stock है, आप
Good.
पकड़ के रखो, which is very weird because it's bad for business. And first ones to launch research. Who does equity research in 93, 94? No one does that, but somehow we did it. So I think very pioneering work that we've done, and that has been very knowledge. I mean, that's been great, being part of that story, part of that history. So I think that's I think yeah, you tend to build up your understanding from a very early age, and the beauty of a stock market is the longer you see, the smarter you get. So I think the time is inside the stock market.
Any overheard
Has been
conversation, any
very-
conversation that you overheard and has stuck by with you, and you still carry those pieces of conversations that were spoken to you, or maybe you heard them speak to each other and are still
Lots. Honestly, lots. Yeah. I think so there were a lot of small stories. I think so there are thousands of things that I've learned. One thing that really there are many things. I think we are in the position right now at MO to not just predict the future, but create the future. I think that's a pretty powerful thing that Ramdev keeps saying. That we have the distribution strength to innovate and do whatever you want. So I think we are thinking of really what can be the next thing that can create wealth and can be created in house, can be created with us. So that's very vital. Also now I think if you ask them, one thing that they probably regret is maybe not thinking big, even though it's a big company today.
right.
The company, the big thinking mindset happened much later, maybe in the early 2000s. And I think if you ask them, what is their one thing, maybe they didn't think. So I remember when we were like very young, you know, maybe, I don't know, 15, 16 years old or something like that. And, again, we asked, and not me, but, I think Ramdevji's son asked him that, Infosys started 5 or 6 years before Motilal Oswal. Infosys, which obviously, so we asked, why is that coming? This is again a very naive question, that why is Infosys so good and we're still where we are? And then not a lot of answers you could have, that, labor arbitrage, or, IT boom, software. But simple answers that, yeah, we didn't think big enough, So I think now I think obviously the dream is quite large. If you look at the current structure of Motilal Oswal, our asset management business can become the next BlackRock. Our private equity can become the next Blackstone. Our wealth management business can become, yeah, like a Credit Suisse, or something else. Broking business can become like a Charles Schwab. So we are looking, and these are components, and we have mortgage finance business. We have one of the largest prop books in India today. So I think right now, obviously, the thinking is very, very much very big, and I think that's what really excites all of us to be
There's a
working with.
tailwind also for the industry to, boom.
Honestly, I think that's where luck has come in. No one really predicted India to be where we are 30 years back.
Right.
So I think we have the opinion that the only control you have today is on costs.
Right.
And we tend to be very, very cost conscious company. And I think the tailwinds will help us grow our business.
Right.
So I think I do agree. Now going forward, obviously, tailwinds will be great. We're building in such a way where tailwinds will obviously impact us in a very big way. But I think as an organization, we're still pretty much focused on what we can control, which is costs, processes, systems. Somewhere, again, we may not have invested in certain areas, but now we're investing.
Correct. And before we end, Pratik, there's one last question that I would want to ask, that is for mainly for the viewers. Like, what kind of advice, like one piece of advice, if you would like to give to them, what would that be? Our audience is mainly people who are investing in the markets, through mutual funds, through ETFs, or maybe through some stock selection. That is the kind of audience we have, and the age group is about 25 to 30, 45. So, what kind of advice would you give to them?
I feel like the advice would be, very generic advice. Obviously, is to really, I would say that all of us in the industry should have the goal of creating wealth. Uh, I think, obviously, to create wealth, uh, we believe that if you look at every single wealthy person, and this is what I keep saying in a lot of forums, is the one thing that is common between most wealthy people, 99% of wealthy people, is that they own stuff.
Right.
They own their own house, they own companies to stocks, own their own company, they own land, they own gold. A lot of us tend to have too much of our time spent in, um, you know, getting that salary or getting that increment, which I think is fine, you know. But I think what normally happens is when your salary goes up, your lifestyle goes up. So I think what's important is and we believe that for us to create wealth, you have to get more on the salary. I disagree with that. I think to create wealth, you have to own stuff. And I think the culture of ownership will happen if you start owning early. So I would say that a lot of people have this FOMO and this and that. I think it's important to enjoy life. There are some people who invest 80% of their income. I think that's a little bit too aggressive. You should enjoy life, obviously, but you should not. But you should have a balance in life where you should focus on ownership as a way to create wealth, and also obviously, make sure that as age, say when you turn 50, 55, whenever that happens, a good target to have is your income from your investments should be higher than what you're making on a job. So that's a good target to have. And I think you should structure your life in such a way where obviously you're doing well at your work, absolutely working hard, but you're also making sure that you are taking out time and thinking about how do you want to create wealth and how do you own stuff faster and better. And second, obviously, is to get that investing right. You should invest in good books and develop EQ.
Right. Thank you so much, Pratik. I think it was a wonderful conversation. There were a lot of learnings and a lot of key takeaways for us, especially the data that you shared regarding funds return versus what individuals make. The narrower that gap becomes, the better it is for all of us, and it eventually helps us own things and create wealth for us. Thank you so much, Pratik.
Thanks so much for having me.